Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And good morning, listeners. Welcome back to Tax Insight here on WOMT. Jeff, good morning, sir.
Good morning, Terry.
It is tax day, April 15th.
It is, and unbelievable to me and to my kids, I've been doing this for 23 years. So this is literally my 23rd tax season.
Wow.
And you know what? None of them are the same. Everything is just a little bit different.
Sure.
You know, just when you think that, it can't get any crazier, it does. So last year, it was COVID. It was the PPP loans. It was the EIDL loans. It was COVID sick pay, that really threw some complications into it. This year, we thought, hey, maybe it'll be a little bit of an easier busy season or tax season, but then they threw a tax law change kind of right in the middle of tax season. And the funny thing is not funny, but it affected returns that we've already filed. So it was retroactive back to 2020.
So let's talk about some of those examples.
Yeah, so unemployment was the biggest one. So unemployment became non-taxable for certain individuals. So as a reminder, because we talked about this on a prior show, but if your adjusted gross income is less than $150,000, then you can have up to $10,200 of your unemployment that's not taxed. And that rule came into effect kind of right here in February or March when a lot of returns were already filed. The second thing is, there's a payback that you have to do if you get too much subsidies for the Affordable Care Act, and that was eliminated in 2020. So, if your income was too high, you generally needed to pay those subsidies back, but not for 2020. And it was only a 2020 change. So 2021, the rules go right back to where they were before. That was another thing that kind of changed here right in the middle of busy season. And, we were still waiting to see what states were going to do with their PPP funds and how they were going to tax it. The IRS came out fairly early and said, they were going to treat the PPP as totally not taxable. But the states were a lot slower to come around, and some states, I think, are still deciding on it. But that delayed a ton of our business returns.
Right. And now tax returns, they were extended to May 15th. So really today is not tax day because we have another month, correct?
For individual returns, you're exactly correct. So for an individual return, that was extended until May 15th. But there's certain states that didn't extend it. So today is still the tax due date for those particular states. Now, the good thing is that Wisconsin and Minnesota did extend the deadline. So they're at May 15th, just like the federal is. But of course, none of this stuff is as straightforward as it could be because, the first quarter 2021 tax estimates that people that are small businesses pay, that was not extended. So that is still due as of today, at this point at least.
So were there returns that were not extended as well?
There was. So, it's still April 15th for things like a trust return, a gift tax return, corporation returns that have December year ends. Those returns will need to be extended by the end of the day today because today is still their due date.
So what else was extended then?
Well, since they extended the individual return due date to May 15th, or technically May 17th because May 15th is on a weekend, they also extended the fact that you can make your IRA contribution for 2020 now until May 17th. You can also make contributions to your health savings account and take them as deductions on your 2020 return, and you have until May 17th to do that. And the same thing for putting money into 529, those college savings plans for kids. That was also allowed to be extended till May 17th to still get a deduction in your 2020 return.
And I would imagine that we're not done with some of these extensions.
You know what? I think you're probably right, Terry. When we think about what's going on in Washington right now, there's that infrastructure bill that's going through Congress or will be going through Congress soon. I'm not sure. I don't think anybody's sure at this point whether those changes to that bill are going to be effective as of January 1st of 2022, or if they'll make them retroactive back to January 1st of 2021. Who knows? So I think there's still a lot out there that is unknown.
Yeah, it's kind of like day by day right now, right?
It is.
Jeff, a lot of great information each and every week here on Tax Insight. For those listeners that want to connect with you and the team at Hawkins Ash, how do they do that?
I would go right to our website, HawkinsAshCPAs.com.
Jeff, we'll talk to you next week.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at HawkinsAshCPAs.com. Hawkins Ash CPAs. Part of your business, part of your life.